What a market. Let's take a look at futures this morning, pulling back from another record high yesterday. Dow Industrial is expected to be flat at the opening of trading, but the rally is impressive. The Trump rally continues. The Dow closing at another record high yesterday, and if it closes again today at another all-time high, it won't only be the 9th in a row, but also the longest string of consecutive record highs in 30 years. How much higher can this market go? Is it all about earnings, Bob, or is it the anticipation that we're actually going to see a better economic story in 17 and 18?
I'm not the expert on this panel. There's a lot more knowledge than me. But here's what I would look for. One is Yellen. What happens on the interest rates? Two, we got to look at earnings. You know, the current projection is like somewhere around 130. And so I'm looking for the way sign that says we're done, pull back, get some dry powder. When it goes down, go back in again. I mean, that's kind of where I'm at right now.
Well, it's the fundamental backdrop, right, Lenore? I mean, we talk about this a lot on this program, and it's about anticipation of earnings. And a 15% corporate tax rate is equivalent to a 20% bump in corporate earnings, S&P 500.
Absolutely. We've been seeing that corporate earnings have been going, the growth has been very, very weak. We've had less than 1% growth. But right now we're forecasting for 2017 to see over an 11% jump up, and that's a very big jump.
Yeah.
Would love to see it, but to get that done, we've got to cut red tape and we've got to get those taxes down. And I think it's just going to be tough to get that done fast enough to really have an impact in 2017. So I think the market may be getting a little bit ahead of itself here.
A lot of exuberance. I mean, a lot of this anticipation of tax, repatriation, etc., I think Dagan is built in. So let's see.
Confidence that we've seen among consumers has actually translated into solid retail sales. We saw that in the broad numbers in January, a higher sales number for the month of December. We saw good holiday sales out of in the Walmart earnings yesterday as one example. But in terms of the tax reform, we're going to get double-digit earnings growth without tax reform in Washington. So we're going to get at least that. And now you're starting to hear about tax cuts instead of tax reform. If they can't get their arms down in D.C. around broad kind of overhauling the tax code, you're going to get tax cuts out of the Republican-controlled Congress.
What a black eye if they don't actually get the tax reform package done. I mean, how many times has the leadership on the GOP side said to us, we understand this window of opportunity we have, and we know what the American people want. We'll get it done.
You're going to hear a lot about that from the Business Council later this week, Maria, when you're down there.
Yes, well, exactly.
There was a letter written from the chief executives of, there were 16 major corporations, but it's Boeing, Caterpillar, General Electric, who would benefit from a change in from the addition of a border adjustment tax. And they're urging, it's a letter written to both Republican and the Democratic leaderships in Congress saying you got to get tax reform done, but they're on board with a border adjustment tax. Retail is not. No. Oil companies are not. And a lot of Republicans even are not, because it's going to send prices up in certain industries.
What about that, Bob? I mean, you've studied this issue in terms of being a multinational company for so many years.
Right.
What about what Dagan's saying? The manufacturing side of the economy wants it.
Yeah.
And the retailing and oil business doesn't want any border adjustment
there's
tax.
Even some division within the manufacturing. I mean, Caterpillar is not too keen on the border tax, I think. There was another letter written to the administration to be very cautious. Look, we spent the last 2 decades developing a global supply chain because we wanted to be globally competitive, right? Not just domestically competitive. And it's going to be very difficult to move product offshore, onshore, when, one, we don't have the technology, and it's going to take time to build factories if you want to do that. So I think we have to be diligent, we have to be thoughtful about where we put it, how we put it, and it's got to have consensus behind it, or it just won't work, Maria.
You don't want to overnight change the cost structure.
Right. Which is what Dagan's saying. The cost structure changing will lead some companies to raise prices, and that's what impacts the customer.
And how do you, as a politician, how do you talk to your constituents and say, I voted in favor of a tax reform package that is going to send the cost of gasoline up, whatever, 30 cents a gallon, whatever it might be. And I'll point out that the Information Technology and Innovation Foundation called on Congress to lower corporate taxes, but warned that adding a border adjustment tax could throw a wrench into it.
Exactly.
So that's exactly
the wisdom.
Either the consumer's going to pay more, or corporations have to earn less, and that's not going to work.
And yet, don't most countries have some kind of a border adjustment tax or a VAT tax?
Yes.
So There's that, too. There's that argument that this is a little bit of catch-up on the U.S.'s side. But let me get your take on this, because the markets are up. We're seeing this euphoria over the anticipation of new policies coming. And yet two-thirds of Americans are not even putting money into their 401k or any retirement plan that is tax-deferred. So, in fact, when you look at the fact that people are not even putting money into their 401k, do you equate that to two-thirds of the country missing out on this rally?
Well, let's look at some of the facts. Credit card debt is up. Car loan default is up. So people are putting money into, we just heard about higher costs or higher price tickets in automobiles. And
$1.4 trillion in student debt.
And we saw also, homeowners now have gone from a maintenance mode to an investment mode in their homes, because we're starting to see the flip come back again, where people invest in their bathrooms, their kitchens, Dagan, right? That's where they
Your
get
old company, Home Depot, had good holiday sales.
They had a great 5.8% comp improvement. That's outstanding.
Look, I'm doing that kind of
because
stuff.
They're going to a maintenance, investment mode versus the maintenance mode.
Also
which is what you want.
Yes.
And also proof that these companies now can actually get people into their physical stores, that's not, that it's not going to be online, that if you provide good service, then they'll show up.
Well, that bricks and clicks is working for them, because they're ordering online and then picking up in the store because of the size of the products they're buying.
Well, we'll see if any of this positive development leads people to put more money into their 401k.
Yeah.
And get them to come out of debt, because that's the issue here. Yes, the market's rallying, but not everybody's participating.